Welcome to Access a Trader, the #1 community for those who are committed to taking control of their trading in order to achieve success, profitability, and longevity. Thank you for joining us. Here's Dan Shapiro to help you find your edge, master your process, and own your future.
Hey guys, good evening everybody. Welcome to another edition of the AccessATrader.com nightly wrap-up show. Hope everybody's doing well. Happy Monday, guys. Hopefully you got a good start to your week. Kindly, guys, take a moment now, support the channel. All I'm asking for is click a like. If you haven't done so, subscribe, share, all that good stuff. And hopefully, again, I can continue to help you guys on a day-to-day basis, navigating these streets, right? These streets of the market. So let's talk about it. So back-to-back Mondays, we've seen, pretty much sharks in the water. You saw that really great bomb that was dropped from DeepSeek. NASDAQ was down around 1,100 points pre-market. The market recovered. Then last week, we had the start of the tariff wars, trade wars, all that good stuff. NASDAQ was down 200-300 points. The market recovered. Going into this week, we talked about this. Going into this Monday, the question was, well, we knew there was going to be more tariff, right? More tariff talks. The question is, how is both sides, right? How are both sides going to react? And if you watched the weekend video, we talked about, I wanted to be kind of flat because I thought both sides were going to be exposed, just because you keep on hearing the same news reiterated over and over and over again. Eventually, one side of the market is just going to go dumb to it, right? It's going to go dumb and numb to it, and it's not going to be as of a big a deal. So when you got the headlines over the weekend that Trump was going to impose a tax on tariffs, right? It was almost a sigh of relief from the tech sector. And when you woke up this morning, you saw semiconductors, right? Semiconductors had obviously one of the biggest exposures to China. They started rallying. Everything was up. You had Nvidia up. You had AMD was even up. We'll get to certain names in a second, but it was a good thing, right? It was a good thing. You look at the markets, NASDAQ up about 1% today, or 190 points. And my mom says this all the time. No news is good news, right? So when the semiconductors and the rest of the technology didn't hear any more retaliatory talk, especially from China, it was like, sign of relief. Let's go, right? Let's absolutely go. And it started off very good for a lot of names. Market was very, very strong. And then we started seeing the names that were not as strong, that started losing, that had not great quarters, started getting really, really heavy, right? Heavy towards the afternoon, and they closed way off their highs. Tomorrow morning, right? Tomorrow in general, you have more news coming out, more earnings coming out with SMCI. SMCI has been on an absolute tear for the last 7 days. The stock has gone basically from 25 all the way up to 43. Now, why is that important? Well, if you guys remember, there was a series of research reports or hit pieces by Hindenburg Research talking about, well, this is the next big fraud. This is the next big zero. This is beware, buyer beware, right? All that good stuff. And the biggest fear on being from the long side of SMCI was, can you trust their numbers? They fired, or I think their auditor at one point stepped down. They had to get a new auditor. So the rally going into this earnings quarter, going into tomorrow's session, is, well, are they going to put the investors' fears aside? Are they going to supply a report that is deemed okay because they have a new auditor? Is all this stuff going to be good, right? And then the second question is, well, is this already going to be baked in to a potential report? Again, we've seen time and time again this earnings season in a lot of names that they do report a pretty good number and they still sell it off. The options market is speaking pretty aggressively. We saw some weekly 350s ahead of the report. We saw some March $70 calls tomorrow for SMCI. It's going to be very, very interesting to report. If you are running some sort of Ponzi scheme, right? And again, I'm not saying they are, but if you guys remember, so all you guys who are old enough to remember WorldCom, right? WorldCom and Enron, they always had great quarters, or any single time there was a fear of some sort of finagle, right? Some ookie bookie, very shisty business. They always came out with kind of a good quarter. So the question is, well, does SMCI pull one of those jukey pookie quarters and, still keep afloat because they're hiding something? Again, that's to be determined. But again, it really did really fuel the semiconductors today. And, they were kind of the leaders into this rally. If you look at the mainframe, kind of the mainframe of the market, you'll see the similarities, right? AFRM, and this is what I mean about a copycat type of business. AFRM is starting to feel like PLTR, right? We talked about AFRM on the weekend video. Keep an eye on it above earnings highs, earnings highs, earnings highs. Well, it took out earnings highs and the stock traded up about another $3 above those earnings highs. So guys, earnings highs, earning lows for this quarter and going forward. Put that into your mental Rolodex. I think we've shown you guys plenty of examples of what happens when stocks lose their earnings lows and what happens when they reclaim their earnings highs. That is one of the highest probability because there's a catalyst behind and there's a confirmation above a higher or lower level. So let's talk about, right? Let's talk about some names. And so as the market's going higher, the names that had good quarters, they really didn't rally a lot, right? Google had a nice pop and then gave pretty much all of it back, right? So again, inside day after losing earnings, again, this is going to be a very similar, a very eerie looking chart to Tesla. This is now second day in a row below the 50-day moving average. Remember, the longer a stock builds below the 50-day moving average, there's a higher probability it will get pulled. So again, inside day, I'm still watching this thing to take out Friday's channel. Apple, right? Same thing. Apple has been under the 50-day moving average for 1, 2, 3, 4, 5, 6, 7. Tomorrow will be day 8. We're talking about almost 2 weeks worth of consolidation below the 50-day moving average. As you can see here, it gave back everything, right? Only up 25 cents on the day. Guys, I am watching this earnings low tomorrow. If next couple of days, if this thing starts breaching its earnings lows, Apple will get hit. It's just, again, you could just see it with the naked eye. If it can't rally when the Nasdaq is up 1%, well, when the hell is it going to rally? So Apple, again, doing the same thing that Google is doing. So again, be mindful of that. Microsoft, another example. It can't rally, right? It can't rally. Another inside day. The stock got slammed on Friday. Inside day, guys, you have 1, 2, 3, 4, 5, 6, 7, 8. You only have 2 candles that close green, right? That means a higher close than open in the last 2 weeks, including, again, I understand it was up $2, but $2 on an inside day is not that big of a deal. I'm still watching the earnings low here. It's very, very important to understand. Amazon, right? Amazon, it held, right? It held. Put in an inside day today. I shorted some Amazon this morning into daily supply. Didn't really react the way I wanted. It only went down like 50, 60 cents. Took some cash flow. Not really a big deal. But again, the longer it goes sideways and it can't start reclaiming levels, I will be watching for earnings lows as well. So those are the names you kind of want to see rally. They're not, okay, and that's kind of a big deal. And the biggest deal of all is now Tesla, right? So if you've been watching these broadcasts, we talked about it over the weekend. It should see to kind of end this cycle, at least end this interval, roughly the 354 area, right? So it went to 354 this morning and it bounced 10 points. Oh, by the way, I missed the 10-point bounce by 50 cents. I wanted to get the 350 remount. It traded 350 and a half and it only rallied 12 points off the lows. I literally missed a 12-point rally for 50 cents, but whatever, it is what it is. So here's the issue with Tesla, all right? So it's just like Google, it's been below the 50-day moving average, and now it's building, and now this is the lowest close in the whole formation. You have news coming out that Elon Musk is leading a group to make nearly a $97.5 billion potential bid for OpenAI. Obviously, he needs to get the money somewhere, right? This is probably what's been going on. This is all speculation, but I'm guessing, right? I'm absolutely guessing that probably seen a lot of heaviness, and obviously there's been no filings so far. But you see it selling. Listen, if you're going to buy $98 billion worth of something, you got to get your money from somewhere. Somebody got to be the seller of the stock. Yada, yada, yada. Here we are. Look, do I think the stock is getting a little bit ahead of itself? I do. Not enough for me to buy it, right, until it takes out a previous day's high. But you have to be a little bit more, you have to be a little bit more reserved from aggressively shorting. Now, again, keep this in mind. The stock broke down from 373. That was my sell. That's where I started shorting the stock. The stock right now, after hours, is trading at 350. So you got to be very, very mindful of shorting very, very aggressively when the stock is made move. Again, you could have the worst company of all time. I'm not calling Tesla the worst company, but you could have the worst stock of all, and no stock goes strictly down. I could see a scenario, and honestly, it has to do this. Tesla really needs to kind of make a stand. The sellers really need to get tired. If this stock cannot rally in the next 48 hours, then there will be another leg lower. But I want to see a little bit of a digestion in Tesla before another string of selling. If it's possible, shakes off some of the stigma in the next couple of days, there will be a day that we can participate to the upside. But until it starts reclaiming bigger levels, the overall aspect of this of where the trade should be is still to the downside. But again, I'm not going to be shorting it tomorrow. I just feel like 25 points in 3 sessions is a little bit too much. If it keeps on going down tomorrow, God bless. But I want to see this thing kind of go sideways for a couple of days before the next leg down, before I start looking for another entry to the downside. Nvidia. Here is my dilemma for tomorrow, right? Here's my dilemma for tomorrow. If you've been watching the channel for years and years and years, again, you know how important the 50-day moving average is for me, right? Above the 50-day, you kind of go with both hands higher. Below the 50-day, you kind of go below hands lower, right? Here's the problem. NVIDIA today got rejected off the 135 level. Remember we talked about on the weekend update, any close above 135 is a big green light. It got rejected literally right at the 50-day moving average today. Now, the question usually I'd be going to myself, I'd be like, well, if it reclaims the 50-day moving average tomorrow, of course I want to be long, right? That's one side of me, right? That's one side of me. It's like the angel and the devil trying to convince myself to do something. Here's the problem. This is where it's not all cut and dry going into tomorrow. The problem is NVIDIA has rallied in the last 6 days from 113 to 135. That's a problem, right? It's very tough for me to go in with a lot of conviction over the 50-day moving average tomorrow if it's up 7 days in a row. It's tough. It's very, very tough. I would never in a million years buy something up 7 days in a row. But it's the 50-day moving average. Dan, you said it yourself. It's so important. It's the birth of a trend. It's not the birth of the trade. It's the birth of the trend. We'll see, right? We'll see. I am open-minded tomorrow. I'm open-minded tomorrow to see how it plays out. The problem is, I know it's up 7 days in a row. That means I can't do the size I really want to on a 50-day reclaim because it's up 7 days in a row. So if it does go, you got to turn back and you go, oh, crap, I knew I should have been bigger. But you can't be bigger because the stock is up 7 days in a row. In a perfect world, we have this conversation 2 days from now. And 2 days from now, if we can go into into the future, I would say, hey, this has been a great 2-day consolidation. The next time NVIDIA gets back above the 50-day, that's when we start pushing in. So in a perfect world, it doesn't get above the 50-day moving average tomorrow. I would love to see the stock literally go sideways for the next 2 days, at least 1 day, right? Give me 1 day. Give me 1 day of consolidation. It's just, give me something mentally that I can hold on to that can at least use the previous day's low as my exit strategy. Because again, buying 7 days in a row is really, really irresponsible. We'll see, right? We'll see. That's kind of the dilemma I have for tomorrow. Let me give you guys some other names that I'm watching. Apple, I am definitely watching. I am definitely watching Apple. I think this is very, very close to losing its earnings low. I'd like Philip Morris. I swear somebody didn't hack me. I like Philip Morris, guys. This is the first close above the 50-day moving average, right? This is literally the first close of the 50-day moving average. Let's keep an eye on Philip Morris tomorrow. If it starts confirming today's channel, who knows? Maybe this thing really, really wakes up. It's not a bad-looking chart. It's a great-looking chart. This was a technology name, man. I'd be in this thing both hands. This thing looks really good. Look at Avago, right? Avago is sitting now in a 4-day channel. Tomorrow will be day 5. Let's watch Avago. If it could clear out a 5-day channel, maybe this thing can wake up. Look at AI. This is all the same setup. Again, you see how AI also got rejected off the 50-day moving average. It got rejected off the 50-day on January the 22nd, got rejected on the 50-day moving average today. Let's watch this thing in the next couple of days. If this thing could reclaim back the 50-day moving average in the next couple of days, this thing should be along as well. So let's keep an eye on that. And I got one small one for you guys, LAES. Okay, LAES. Buyers came in today. Repeat buyers came in for the 450s. I forgot which expiration, so forgive me if you probably do your own due diligence there. But watch this LAES. This thing had a massive run in 2024. Watch this little baby channel here. If it can just get above this 3-day channel, maybe this thing can wake up as well. So that's it, everybody. Hope everybody is doing well. If you are interested in pivots, guys, again, Kenyon made it showing the love, right? Showing the love ahead of Valentine's Day, giving guys a pretty decent, pretty big discount just to check it out, just to see if it's a right fit for you. If you are comfortable in something you are interested in, I am here to open up the world of pivots. Guys, God bless everybody. Have a great night. And with God's help, I'll see you all tomorrow. Take care.